MMI Holdings, Centurion-based this time. The Momentum business traditionally was as well, and Metropolitan, I think, was more Cape-oriented. You put the two together, what do you get? MMI, MM and I, Metropolitan Momentum Insurance. There you go, that's what the logo means. Financial Services Group, market cap I see is just short of 40 billion rand. Merged and combined of those two entities, which have largely now been put together, they provide the same suite of services: long and short-term insurance, employee benefits, asset management, healthcare administration, the whole lot. Price-to-earnings ratio 15.2, dividend yield of 4.4. They've done well, I think, to kind of get the synergies out of that combination, because they weren't all that strongly overlapping, with Momentum more on the upper end of the market and Metropolitan more towards the lower side, right?
Yeah, and I think they've been about 3 years since the merger occurred, and I think
3 years already. Yeah. Feels like yesterday.
We're getting old. But I think they have come out and said that they think they've bedded down the merger at the moment, and so they're looking forward to expansion going forward. I do think that, as you mentioned, there was no overlap in terms of the areas of the market they were focusing on, but they did have, obviously synergies that would come into play because they all have to use the same administration, they all have to use the same kind of, back office stuff that, and that was obviously something that they did save money on. Look, I do think that it's a case here that we've had a choppy few years. They haven't done the run as we've seen with Old Mutual or with Sanlam, but that's because we're bedding down a large merger. Now that it's done here, I think they might be able to do a bit of catch up to the competitors out there.
But what's going on here at the end? Because unlike the others, what is this? Is this uncertainty or movements related to earnings having been a little bit less predictable than expected?
Yeah, I think it has probably to do that here. We haven't had this strange uptick we're seeing with the Sanlam and with Old Mutual as well. I do think, however, that now that we had a choppier period, there's no doubt about that. But because of that, I still think there's more opportunity here than there would be in some of the other factors we looked at, because they've had such a rocky period.
What about the management team? Because what's his name? Nicholas Kruger, right?
Yeah, Kruger. He's
the CEO. He came from a Momentum side of the business. Some of his predecessors, like Hilly Meyer and so on, sort of moved out. Again, Nicholas, quite understated, but seems to have done a good job. The CEO of the Metropolitan side of the business, what's his name? Wilhelm van Zyl or something. I should get these things right rather than just spouting them out. But he seems to be on board, and the team seems to be quite united, and they kind of focused on doing better and gaining market share and all that kind of thing.
Yeah, look, like I said, I mean, we've had a period of adjustment here, and when you take two large organizations with very different cultures and you put them together, you have to have a situation in which you take a bit of time to get together. But now that they've done it, I do think that they probably are going to do better than, say, the competitors might.
Okay, but I want to ask you my question about that issue about being negative about these guys because of the fees they charge. I mean, if you look at the assets under management of these groups and then you look at the revenue, it's high.
Yep.
They charge like 3 or 5% for everything per annum. They charge you 3 or 5% to change you out of a living annuity into a preservation fund or whatever, or to terminate your membership of a retirement fund and put you into something else. Is there pressure on those margins? Over time, do you expect those margins to compress and therefore the whole industry to be under threat? Or am I just wasting my time here? It's just going to be like this until the rest of time.
Look, the margins are pretty high, and there are inefficiencies. For instance, like we went to, I know, transferring between one platform and another platform within the same company, there is an issue with that, and there are penalties, etc., associated. But government has stepped up its game recently. We have had changes to Regulation 28. That means that, in terms of how you save your money for pensions, etc., you have more choices, and more choices bring more competition, and that has, to some extent, affected the market. But the problem is, I think, out there that most people don't think about these things on a daily basis.
The customers are not even really paying attention.
They're not paying attention. I mean, if the customers were paying attention, they would look at the performance they would get, and sometimes they would say, the kind of charges you bring through to me now, if I had not paid these charges, after 10 years, my wealth would be 50, 60% higher, which is a lot of money. And over the period.
So what you're telling me is that's just going to continue. So what I want to tell our presenters is just go back and change all of those not hots that I gave you earlier. Just change them to hot, because these guys are going to carry on making money. Viv, hot on MMI as well?
As well, I am, yes.
Hot on this one too. Good.